Greetings, everyone. This is Shai with you. And today we are going to be looking at the spectrum chart. Okay, now the chart, on your screen right now is the Nifty spot, and we are looking at the spectrum. Now, how do I get this chart? From the menu, if you click down NF option strike spectrum, BN option strike if you want to choose Bank Nifty. This is where Bank Nifty would be the Bank Nifty spectrum. But for the purposes of this video, let's stay with what the Nifty is. Though what I mentioned is going to be the same. So first and foremost, this is going to be off the spot, and you have a number of options open. So let's go through them. You can look at this pane below, and let me just deselect all of them so we have a clear vision of what we are looking at right now. This is the spot chart, and because we like to look at what the futures are also doing, the future premium is also added over here. Now to this is what we call the spectrum. Okay, now the spectrum is represented by these blue lines, and you can run it across a number of days, though will I like to ask you to focus on the immediate 2 days, but you can run it for the entire weekly cycle as well. Right now, this is what the spectrum is showing. Now, to put it simply, the spectrum is nothing but the inventory of the market. Now, a lot of traders, when they look at these lines, and they have this mindset that lines are meant to be support and lines are meant to be resistance. We'll walk a little bit further away from that line of thought, and what we want to demonstrate through the spectrum is where current positions are built in the market, and working out of a concept called the gamma, the second order Greek. We like to estimate a probability of a high and a low, a probable high and low, based on the exposure of those option traders in the market. Okay, so this does not mean that this is resistance or support, but the expected range of all the traders, of all the big traders who are placed large positions in the market. This is going to be denoted by these prices. So currently it's about 17,100 on the higher side of, and 16,800 on the lower side, and this can change as inventory of participants keeps changing. So again, I like to repeat, this is a measure of the existing inventory of players, and the spectrum is actually projecting a high and low of that of that inventory which is there in the market. The gamma zero is the neutral position which is there, and generally the belief is if price is staying below the gamma position, the writers are comfortable. It could happen that price could go below these gamma levels also, which means that inventory is going upside down at that particular instance of time. So when it does go, a couple of things can happen. Mostly we have seen that if inventory is caught upside down by the movement of markets, generally price does retrace, and this is generally, I mark it in inverted commas, generally price does retreat, giving market participants a chance to readjust that positions. But when it moves down, it does tell you that the market wants to go down even further, and inventory of the position is moved lower. So the best way you could use the spectrum chart as a writer of options is you could understand the bias of the market. In the case of this chart, it's easily understood that the market is drifting lower, so you could use the upper spectrum line to write some positions, or write some call positions in the market, and monitor the price around this spectrum level, which is about 17,100. If you are an aggressive kind of trader, you could also use the gamma zero reference and write positions around that, and keep an eye if the market wants to stay above the gamma zero level. Okay, you could write it as a range also. You could write 17,100 as a range also, but then that is meant for very aggressive traders in the market, and you need to keep an eye at all times to ensure, okay, that the market is responding and you have the bias of the market right at all times. Right now, there is another element, okay, to this, which is the market whiz high and the market whiz low. Simply put, okay, this is what we call the market visualization high, and whiz low is market visualization low. Now these yellow ones, okay, would be represented by those lines, and they are a mark more of the intraday activity which is happening in the markets. So whenever, okay, you see that this MWIS low is trending lower, the market is getting adjusted to the lower side. I'm not saying, okay, that the price is going to move lower over here. Eventually, okay, price follows the positions of traders in the market, but the market visualization tool is there to tell you that traders have adjusted inventory in, or adjusted positions in the market, and are anticipating a downslide, are anticipating a fresh low in the market. So the market visualization goes lower at around 210 215 over here, and the market, okay, starts dipping lower from a sideways kind of a bracket. Right, so keep an eye, okay, out on this yellow tool as well. This works perfect, okay, for the intraday trader. If you don't want the futures premium, you can just click out on this, and this is done out. The futures premium anyway, okay, comes back to zero as we move into the last settlement of the month. But it's just for us, okay, to let know, okay, what the futures are doing. Right, so it's up to you, okay, what you want to focus on. I would suggest, okay, that you keep the gamma levels also high. This tells you, okay, what the market is thinking of in terms of the larger weekly settlement or the larger weekly expiry. Here you have an option of choosing the number of days, okay, of the series, and you can see it's fairly consistent in terms of what the traders are expecting the market to do. Right, so this is the spectrum chart. I hope, okay, you use it, okay, to the maximum possible advantage. This has got some high level Greeks, okay, built into it, and a lot of, okay, visualization added, using, okay, some premium, okay, tech, okay, which we've developed at WeTrender. So I hope, okay, you found this useful. Any questions you have, please direct them to charts at wetrender.com.